Hi, I'm Paresh Shah, a certified financial planner in Hicksville, Long Island, New York. I get a lot of questions about IRA withdrawals. In today's video, I will share some important points about IRA withdrawals that escape the 10% penalty. The reason withdrawals from a traditional IRA, individual retirement account, before 59 and a half are generally subject to a 10% tax penalty is because policymakers wanted to create a disincentive to use these savings for anything other than retirement. Yet policymakers also recognize that life can present more pressing circumstances that require access to these savings. In appreciation of this, a list of withdrawals that may not be incurring a 10% early withdrawal penalty has grown over the years. Let me share the penalty-free withdrawal circumstances under which individuals may withdraw from an IRA before age 59 and a half without a tax penalty. Ordinary income tax, however, generally is due on such distributions. First, death. If you die before 59 and a half, the beneficiary or beneficiaries of your IRA may withdraw the assets without penalty. However, if your beneficiary decides to roll it into their IRA, they will forfeit this exemption. Disability. Disability is defined as being unable to engage in any gainful employment because of a physical or a mental disability as determined by a physician. Third, substantially equal periodic payments. You are permitted to take a series of substantially equal periodic payments and avoid the tax penalty, provided they continue until you turn 59 and a half or for 5 years, whichever is later. The calculation of such charges is complicated. An individual should consider speaking with a qualified tax professional. Home purchase. You may take up to $10,000 toward the purchase of your first home. According to the IRS, you may also qualify if you have not owned a home in the last 2 years. This withdrawal limit is a lifetime limit. Fifth, unreimbursed medical expenses. This exception covers medical expenses over 7.5% of your adjusted gross income. Sixth, medical insurance. This permits the unemployed to pay for medical insurance if they meet specific criteria. 7. Higher education expenses. You can use the fund towards higher education expenses for your spouse, children, grandchildren, or yourself. Only certain institutions and associated costs are permitted. IRS levy. Funds may be used to pay an IRS levy. 9. Active duty call-up. Reservists may use funds called up after 9/11 and those withdrawals meet the definition of qualified reservist distribution. 10th, birth or adoption of a child. This new exception was recently added to the list. The distribution must be taken within 1 year of birth or adoption of the child. The total amount eligible for penalty-free exception is $5,000, although you may still pay regular income tax on the distribution. These are the circumstances in which IRA withdrawals can be made without the 10% tax penalty. If you have any questions about this topic, comment below. See you again with another exciting financial topic. For more finance related topics, like, share and subscribe to our channel. Thank you very much.